It's been a bad few days for the stock market as the Nasdaq, S&P, and Dow Jones all fall for the third time in a row today. Each one, respectively falling about 1%, has not seen a green day since Thursday last week. These recent falls, though, are a slap in the face to most investors as it seemed that the stock market was recovering from the bear market that's been plaguing the US economy as well as the global economy for much of 2022. So for the past few days, what's changed? What's caused this fall in the market? Let's find out. Hi everyone, my name is Peter, and if you like this video, make sure to give it a thumbs up and hit the subscribe button, and you'll be getting a lot more personal finance and stock market information with the videos to come. The past 5 days has been really rough on the US economy so far, with the stock market having extremely red days trailing one after another. This past week has been extremely difficult for the US economy. Trailing 3 red days, extremely red days, has been very harsh on the common investor. With the fear of inflation staying high and consumer spending staying on the low end, it was very safe to say that a full market rally wasn't in sight, but we were expecting for a few green days, if not a pretty sideways market. However, with these red days that have come, there are a few incidents that point to what could have happened. The first comes from the signing of the student loan forgiveness bill. President Biden signed this bill on Thursday, August 25th, and it seems to have created a rift between the American people, with those buried under student loan debt rejoicing at the light at the end of the tunnel that could see them not living paycheck to paycheck anymore, and the other side seeing a huge burden on the United States going into even more national debt. This fear is sending investors into a worrying mindset as the large American national debt grows even larger. The second event, and arguably the straw that broke the camel's back, was the Federal Reserve's comments on inflation last week. Fed Chair Jerome Powell and company released their plans for inflation and confirmed that they would continue increasing the nation's interest rates. These interest rate hikes will hopefully slow down the economy in the Fed's eyes and make sure that inflation is fought off. Many investors were seeing the Jackson Hole comments come out as a lightening of the interest rates. In fact, no more interest rate hikes for 2022. However, the Fed had other ideas. In order to fight the inflation rates that are causing great fear throughout the country, they are going to increase their rate hikes as they have planned and not stave the path that they have formed already. The Fed said that they plan to stay the course and, quote, while higher interest rates, slower growth, and softer labor market conditions will bring down inflation, they will also bring some pain to households and businesses. These are the unfortunate costs of reducing inflation. But a failure to restore price stability would mean far greater pain. This change from what investors were expecting to hear or planned to hear obviously shocked the market. Now this quote obviously sent fear down the spines of investors as they started to pull out on Friday, which started the 3-day red tide that we've been seeing in the markets. Since then, all 3 markets have seen red days as far as going down by 2%. With the fear of the interest rates rising again and slowing down the economy, even hurting businesses and households, investors began to pull out their money. These major events, as well as the fear that's been sustained throughout 2022 in the US economy, is what has caused the red markets for the past 3 days. These major events, as well as the fear that's been throughout 2022, are the main reasons that we've seen these red days in the markets. Now, if we don't see a green day or a bounce in the market soon, we could potentially be seeing more and more red days to come. With interest rate hikes on the horizon, employment being slowed down by major companies, as well as many companies holding cash to make sure they can make it through an economic crisis, it is more likely than ever that we will see more and more red days.